As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only.
Good morning, good afternoon, good evening. It's Friday. If you guys are not subscribed, go ahead and subscribe to the channel. I do post every time on Twitter that I am going to stream, but in the event that you missed that, I have a great team of editors and video guys that put together recaps and put together shorts, and all that stuff stays on the YouTube. And as a reminder, on the YouTube, there's also the market profile and order flow course that I created, I don't know how many years ago now, and that's completely free. If you guys are interested in any of the exchanges that I mentioned, there's a whole list of them with the current bonuses that are available. A lot of times people want to know what I think in terms of the best exchanges and platforms, and that's as much shilling as you're going to get from me. Those links are available in the Linktree link in my bio on Twitter. I was looking at just news sources this morning. What can I use to touch on stories from the last week and important updates and just current events? And I forgot that Velo actually has this news terminal now, which if you pay for their paid version, it's breaking news. And I think that's great if you're a news trader. Your tech it's very important. And I think Velo is probably the best retail friendly breaking news application that you're going to get. But this is a platform that now pretty much has everything. I'm not shilling them, but I don't have a link or anything. And I guess it's a free shill. If we're just going to go down the board, we have the news, the futures, options, overall market, and then TradFi as well. Now Velo actually has a trading terminal too. So you guys see me share things like this. Every time I share a chart on Twitter, a lot of the times it's, hey, where is this chart from? And a lot of times it's from Velo. The one thing that I like about Velo is if you're just going to the futures portion of this, it's going to populate it right away with BTC, but you could do everything up here. So if you're trading WIF, for example, you want all of the relevant futures data for WIF, it's right there. So great platform, but we're going to be focusing on this right here just to talk about some things that have happened in the past week. So Consensus, their Wells notice from the SEC, they turn around and sue the SEC, saying the SEC is, as you can say, seeking to declare ETH a security. This is actually great too because it shows you exactly where that news occurred and how price has been trading since then. So everyone's kind of familiar with, I'm assuming, what's taken place between Consensus and the SEC that was posted yesterday. It's interesting because Gensler, not too long ago, was saying that basically you could be certain that a group of cryptos were not securities, and I think he mentioned Bitcoin. He might have mentioned Doge, but he also mentioned ETH. So it's interesting how that there's been a complete pivot on that, but it's very clear. And this is, again, what I mentioned during the SigNups spaces yesterday, and this was before this was filed. The war against crypto is still very much taking place. Higher prices tend to make us forget all of that, but it's still taking place. They move slower. I guess in crypto, we're so used to everything happening so fast. Even TradFi participants, whether it's funds, whether it's just the perception of time in markets, it's much slower compared to crypto, but it's still very much taking place in the background, and this is a battle that I don't think is going to be over anytime soon. So that's something that we should all keep an eye on because the implications of that are obviously very significant. Next piece of news, BlackRock IBIT posts first day of zero inflows. All right, so this is something that I'm not sure of, but it looks like we actually had two in a row because that news is a little delayed, obviously, or meaning that news is old. So that was for the 24th, so that was zero inflows for that day, and then so Wednesday no inflows, and then it looks like yesterday no inflows as well. So two pretty red days in terms of the ETFs, and we actually had Fidelity with its first red day. If you look at how crypto is trading or how BTC is trading and how the S&P is trading, they're very close again. So that correlation is definitely positive again, but I think it's over 0.5. I think the correlation coefficient last time I checked for BTC and the S&P was, I think it was a 0.76 or 0.8. And this is as of recently where this has picked up again. There's a bunch of different woes in the market. There was the conflict in the Middle East that obviously spiked volatility in the short term. And then there's also the implications of either no easing coming down the pipe, so no cuts. So the market looks like it's starting to potentially price in hikes. So they talked about no cuts this year and the potential for hikes to continue. So we're seeing a little bit of that shakiness in traditional markets begin to spill over into crypto. And I think this is an important reminder because there seems to be this tendency by certain people here to think that at some point we break free of traditional markets. I've always tried to frame it this way, that when traditional markets are doing well or at least stable, then crypto kind of has permission to run loose to some degree. But once things get shaky in traditional markets, that leash has no more slack. So immediately crypto or BTC, which then in turn spills over into everything else that's correlated to BTC. Once there's shakiness in traditional markets, there's really no instance where the S&P is going to continue to experience trouble or downside. There's no instance, just historically speaking, not many instances of that continuing to persist and Bitcoin and crypto shaking that off. I think you could expect that, especially with the introduction of these ETFs, that the markets will become more tightly correlated, and this will just increase over time. And that's my opinion. I think you've seen that actually over the last few years. I don't think that that's changing as much as people want to think it's going to. Obviously, there's plenty of pockets of outperformance and where they're not correlated, but as soon as shit gets serious again in legacy, it's going to spill over into crypto. So no inflows. It looks like there is a loss of momentum in this market. There are fears spilling over from traditional markets. A lot of these trades have been riding the idea that we are going into looser financial conditions. And now that is beginning to be slightly turned on its head. Obviously, the market can price this in for a little bit, and then it's not like there's no guarantee that we're going to get any hikes, but you could see that right now that is what we're seeing in traditional markets. It's not exactly allowing crypto to flourish, but we're also coming off of multi-month trends and a ton of strength, and it makes sense for this to happen. I should remind everyone that even for the S&P, break in daily market structure, that's going to happen even in a bull market, right? So you're just going to have to get used to the fact that things don't just continue, as I like to say, monotonically up where they have no pullbacks and it's just a step up process all the way. So I'd say it's lining up perfectly with the concept of sell in May and go away. Really quick, this is something that's easy to backfit. It's not every single summer. It's not every single time that it makes sense for everybody to sell in May and go away. Throughout the summer months, markets tend to be a bit drier, so liquidity dries up a bit, participation is lower. And just think about this from a simple standpoint. Participation is lower for one reason, because people are actually doing things in the summer months rather than being in the office, focusing on markets around the clock. Not to say that there aren't pockets of outperformance. By all means, this is not something that has been the case every single summer. But on a long time frame, if you have bought in October and sold in April versus buying in April and selling in October, you've done better. So I think that traditional markets aren't going to do anything crazy this summer. And because of that, I would expect BTC to kind of more or less range and chop around. But there is a caveat. This is an election year. And then more importantly, because election years tend to be years that the S&P does well, more importantly, election years tend to be years that we see outperformance or just good performance by the S&P. Election years where we have this kind of contention, this divisiveness, those tend to perform even better. There is that detail that I don't think is something you should just completely overlook, right? This is a summer going into, feels like maybe the last election. And I don't say that completely seriously, but for anyone that's been paying attention to the news and what's been taking place between the two candidates, it's not exactly the most positive situation. So that's something worth noting. But from the way that the S&P is trading right now, from the way BTC is trading right now, I wouldn't expect some kind of major change. So it looks like some of the people that are or were interested in the ETF are beginning to pull back a little bit right now. All right, so there's one thing I wanted to touch on real quick, because obviously meme coins are all the rage. So there's a link in that bio for Woo. Woo has a huge fan base. So you have everything besides options, but they actually also just listed indexes now. So they have indices. So they have the memes index, the L2 index, and the GM30. So if you're not someone who is a picker and you're not really quite sure what meme to buy or how to get exposure or how to place a trade, this makes it a lot easier. So if you use the link, you'll be able to access this. Woo is a fully KYC'd exchange, so this is not for everybody. We'll go into BTC first. So my idea for BTC for the summer, there's no grand plans for me. About to close out the monthly in just a few days, and we have this inside month structure. So we're looking at a weekly chart, and this is a good way to look at everything, by the way, guys. If you want a big picture view, sort of top-down view of the market, it's good to have things organized in this way because it's very easy to spot. I think it's better to do something like this where you have a template like this versus trying to switch between timeframes like this, right? It's easy to miss something when you are doing something like this. I think you want to have an idea of just higher time frame context and those significant inflection points. But for most people, I think you're better off organizing things in this manner. The market has been in conditions as of the last 2 quarters, 3 quarters that make, in my opinion, very low time frame trading something that I could do without. So I would rather zoom out a bit more and get back into the low time frame hustle when there's some kind of major change. And right now it still favors, in my opinion, your intra-week, intra-monthly swing trading and up and position trading, trading all the way up to monthly and longer term charts, rather than focusing too much on the low time frames. Obviously, that doesn't mean there's no trades that take place in the very low time frames. In my opinion, though, how I want to spend my energy right now, I just think I want to leave that off the table. So my lowest time frame chart lately has been either the 30-minute or the 1 hour chart. BTC, as I said, we have this inside monthly setup. So what that means is, and you can see the profiles for the monthlies right there. So you're looking at a monthly profile right here, a monthly profile right there. And as you can see, the month of April is fully encapsulated by the month of March. If you could take anything from this, it just means the market is more or less in balance. So it's not imbalanced, it's in balance. So fair value right now happens to be right around $67,000. So even though we've been trading in a downtrend, it isn't the case that we've really changed anything big picture. The market is still trading between a very well-defined range. And you get a better idea of that when you see something like the daily chart. If you're going to go based on daily highest close, daily lowest close within the structure, it's not the case that anything has majorly changed. When you're looking at things through a different lens, you might be able to identify, yeah, it looks like momentum is peeled off. There's been a change in maybe the aggressiveness of the futures market. Spot market has been kind of drying up, but for all intents and purposes, we're still trading in more or less the same structure we've been in going back to the beginning of March. Anyone in position here hasn't really been pushed off sides much. We ended up taking these lows. We haven't really seen anything take place. We're trading within a well-defined range. There's plenty of great trading opportunities that you could hold for days, but big picture view, this is high time frame chop. And I say high time frame chop because a lot of people say chop, but the implication that chop means it's untradeable, and that's not the case at all. I think that we're going to see this continue. I think that as long as we're within this range, there's no pressure on really anybody who's been involved. So, whether you bought slightly higher than here or you're hedged from slightly lower than here, you're within the structure, close to fair value in terms of how much the high volume point within the structure. And no one is really that wrong yet. So if the market was trading much above 75 or 73 rather, anyone who shorted clearly is starting to bite their nails. And if the market is trading back below 60K, then anyone who is longed up here is really beginning to second guess themselves. So until we see that, I'm not going to try to predict much other than this trend will continue sideways. You might even get something that does something similar to what we did after the last halving, which was move sideways for like 70 days. I think last halving, it might have been 70, 75 days. So if we just look at where we are with respect to this more recent halving, and if you're going to look at it and look at that prior instance as some kind of proxy for what we can anticipate, then something that does this is something that we've experienced before, right? Where it builds up. And the last time this happened, it funneled very tightly. So you built up this volatility funnel where you're just ping-ponging, and then you're accumulating stops on both sides, right? I'm going to short, I'm going to long, I'm going to place my stop here, I'm wrong here, I'm wrong here. As you're tightening up, you're confining that region of liquidity either to buy in terms of covering shorts or to sell in terms of closing out long position. And you're building that. And that is something we did previously where we just built up all of that energy. And then when we finally started breaking out of that triangle, that next move was significant. We marked up, we ranged longer, and then we actually dropped back down. So last halving, we moved sideways for quite a while. It's kind of dovetailing nicely with the months we're going into and how the markets have tended to perform throughout those months, minus obviously a couple instances where there's been, again, multi-week trends. But big picture, not much, in my opinion, going to change for BTC. So flat summer, but not necessarily so flat that it's untradeable. But for anyone who is long spot, not much reason to change anything yet. If we look at the daily, one of the things that I like to look at is the 20-period moving average. So as you can tell, we lost it, we retested it, nothing much happening. Market's moving sideways, the averages are going to flatten out. That makes sense. From a weekly standpoint, we're trending down. I think it wouldn't be abnormal for us to actually continue to have this downward drift rather than maybe move sideways. So prepare to lose 60, right? I think the idea is prepare to lose 60. Even testing this yearly VWAP, so 57K, not something that I think is out of the question. And I don't think that even warrants much of a change. So in terms of spot positioning, I don't see a real reason to worry, especially because we are going to a period where I think it's just going to be more or less inactive minus a couple rotations. I'm sure there'll be manufactured, the best way I could put it, manufactured rotations that take place in this market. If we look at just the whole market right now, it looks positive, right? I mean, if we look at funding, everything is cooled down. Again, volatility is cooling down though. We had a big open interest wipe, which is something that you normally want to buy. So after that wipe, there's been plenty of bounces in alts, but we haven't really seen the market show much aggressiveness since then. So we had a very significant open interest wipe in BTC. If we look at global open interest, same thing. So global open interest down from 48 billion down to 36. So $12 billion wipe. So again, when this happens in the short term, I always want to be a buyer when that happens. If we go all the way back to where that came off, so this is aggregated open interest. So we had a major wipe. Since then, we've had quite significant bounces though. If we use that first wipe as a proxy, so if we go back to April 13th, whether we use that or we use the more recent drop, you could see that there's been plenty of memes that have done well. So Pepe, WIF, both of those up significantly. More recently, WIF has been chopping up and down. Haven't been focusing on it too much though, I have to admit. These things are up within reason. I think they're up as you would expect off of a low like this after a wipe like this. I don't know if this is necessarily where you want to add everything back or if you didn't add already. I think this is just the result of kind of wiping the book and seeing things fill out that inefficiency as you normally would. So after a wipe like this, in the short term, it always pays to look for the long opportunity because there's not as much resistance above because you've taken out that pressure. We've seen though that Coinbase has been trading at a discount more consistently to Binance than anything else. That's nothing major, but we have seen during the periods of Bitcoin trending very hard when there's a ton of demand in the spot market, we see Coinbase lifting quite aggressively. So this is always something worth paying attention to that Binance and Coinbase premium and discount. So plenty of things bounced since then. But like I said, I don't think that this is over for alts, meaning in terms of if Bitcoin is going to continue to correct. I think you'll have pockets of outperformance from alts. But I did say 2 weeks ago now, I think the low lows will be established over the summer. If you look at Solana, for example, to me, it looks like Solana has further downside. So we look at Solana on the monthly. It's also the case that we have an inside month. So this kind of balanced setup does offer plenty of trades that I'll take on the daily time frame, even on lower time frames based on this inside balance setup. It's basically the high and low as a threshold for a pretty mechanical trade. Or in this case, what I think with BTC will be a reversion trade. So we have Bitcoin's inside month setup, right? Prior month low, prior month high. If we close out like this, we're looking at this month's low and this month's high as a trigger point. If I had to guess where I'm looking for a short opportunity or the lows where I'm looking for a long opportunity, anticipating that we'll trap more sellers at the low and trap more buyers at the high. This is a good trade location to look for a contextual shift. So to look for a breakout opportunity or to look for a breakdown opportunity as well. WIF is still riding the struggle bus. What did I say? The June or July lows to buy in alts. You know, I said that before we had this major dump. So I was anticipating it would take longer for us to correct. So it's possible that this was the low and maybe we just continue to chop around, but I definitely want to add more WIF exposure. I don't think meme coins are done. I think it's clear that something has changed, right? There's a change in the air. The excitement, the sort of fever pitch has passed with meme coins. And I think that WIF has kind of cemented its place in this market. Great job to whoever put the hat on the bull, because this is definitely something that I think is going to be around like Doge. We have POPCAT. POPCAT is interesting because there's a lot of people now, anytime that people are trying to get you to buy their bags, sharing the market caps of various coins in a sector, whether this is done for a new AI pair that's trying to be lifted, or in this case, POPCAT. I saw people sharing the Doge market cap, the WIF market cap, the Pepe market cap, the contrast of those compared to POPCAT's market cap, right? And it was like 20 billion, 3 billion, whatever the others were, billions, right? And then POPCAT, 500 million. And the idea is that that gap is going to be closed, and it'd be closed by POPCAT obviously continue to go up. To be completely honest, I want a position in POPCAT for kind of that same reason, because you're playing the crowd, right? It's not that I think that POPCAT deserves that valuation, but I think there are enough people that think that that's going to close that are going to be buying on behalf of that. So I was outside and I'm on my laptop and I'm like, oh, I don't have my Solana wallet on here. So I'll just buy some POPCAT when I go inside. And then I never bought some POPCAT. And obviously it's up to 65%. So shame on me. So I'll probably build a position in this. It seems like it's one of those things now where the market is hot. And then two, I just think it's going to be one of those things that has legs for a couple of reasons. There's been cats that have outperformed. This sounds so fucking stupid. This market's so dumb. There's been cats that have outperformed, but we don't have a cat token yet that's set the way we have Doge, right? Doge is like as crypto as you're going to get. Like Doge speaks to the ethos of crypto. Doge could have an ETF. Doge is not a security, right? It's very clear that Doge is pure play on decentralization, and I think it's a good barometer of overall risk. I wouldn't be surprised to see a Doge ETF like a decade from now. Either way, I digress. You know, with funding rates being where they're at right now, obviously Athena isn't in trouble, but if they remain flat and go negative, it's a different story. That just gets wound down. Doesn't have to mean there's some kind of major Luna 2.0. But if you're just looking at it from a market structure standpoint, it's in a downtrend. It's a new coin too. So with new coins, I always talk about how it's a simple trade in that, especially depending on what time in the cycle the coin comes out or what kind of period the coin comes into, meaning is it a period where people are just buying into everything, or is it a period of calm, volatility high or low? There were pairs that you could see benefited from launching at the right time, like Celestia, like Say, like Sue, had major run-ups. And then Athena, which definitely came later in this portion of the cycle, in this period we're in within a larger cycle, and has clearly not benefited from it from a price standpoint. You know, I'm talking about people that bought in upon exchange listings. There's obviously people that are up tremendously, which they're happy to sell into these moves because they're already up tremendously. So you have to remember that. But with new pairs like this, the one thing I always say is that they give you really easy trades. So a lot of the times, the best entries have been new listing finds a base, whether it starts new, drops, bases out, or let's say you're looking at this as a range and you're low, you're mid, you're high, and it's favoring the upper level of this range. Go back and look at Celestia early on. Brief range, very tight, and then had a breakout, and that's it. Just get behind the breakout, ride the comet. How this is trading right now, to me, is not bullish. I don't see a long signal anytime soon. So for me, I would rather see something like this and then begins to retake local market structure. Then I think those easy trades are back on the table, especially because it's a new pair. But as long as it continues to favor the low portion of this range and mark down, I think you could see this continue where it just chops down lower. And then I need to see a major shift in market structure. I don't really require too much when it comes to that. Like there was a really easy one. I had shared this not too long ago. And look, this is October, this is August. So we're talking about 2 months. And then if we look at Athena, we're not even a month into it. So my point is, don't forget how Say traded. Like I said, didn't give you that bullish setup right away. This instead continued to chop down, but it gave you something clean to get behind. And that clean thing to get behind was this trend line governing any upside on the way down. So chopping down, very clean market structure in one respect. And once that changed, it made sense to get behind that change. And sometimes that market structure is clean sideways, or in this case, clean chopping down. There are some obvious levels that are keeping a lid on this. And once that changes, I think it's good to get involved in new coins when they do that. So for Athena, maybe it does that. Maybe it continues to chop down all the way to who knows. But if it gives you something clean, that's really all you can ask for. And then if we're around September and this thing has put in a longer base, then yeah, look to get very long this. Thank you for tuning in, and I'll see you when I see you. I don't know exactly when that be. When that will be. I haven't come up with a schedule, but we'll try to do this more consistently.